All right, so welcome everybody. Hey, Randy and Debbie are here. We're just gonna kind of kickstart this thing here today. A little late. I know we're a couple minutes off our normal scheduled time, but we are looks like running into some difficulties here. So we're just gonna go ahead and kind of bring it to you guys as clear and concise as we can, and give you guys as much information, and hopefully it helps y'all. So if anyone is on. Uh, Feel free to ask questions. I will have the comments turned on so that way we can actually see your questions. And as they come in, we'll try to answer them as best as we can. So, to again start it off, my name is Jerry Avila. I am, I guess, your host tonight, and also mortgage broker out of California, but licensed in multiple states. And you have Randy Teakill, and you as well are licensed out of Texas, but you are also in multiple states, right, Randy?
No, just Texas.
Just Texas. Okay, so just Texas through and through. All right, and then we got Debbie. Debbie, remind me exactly what state you're licensed in, because I totally.
I'm in the state of South Carolina,
That's what
and I'm also licensed in a couple other states as well.
Awesome. I appreciate you guys making time. I know that we all kind of just hopped in on this one, and wanted to discuss what today's topic is about, which is essentially credit. Good credit, bad credit, just credit in general, credit difficulties and the challenges that we face as loan officers, as mortgage professionals, trying to navigate to best help our veteran consumers, and essentially helping them actually meet that or gain that opportunity for home ownership. So we'll go ahead and I'll pass it off right now real quick over to Debbie to kind of go over a little bit about how she helps veterans when it comes to low FICO scores, how it is that she meets some of those challenges. And we see a hello from let me see, it's a little small here. What do we got here? I can't see the name. Oh, it's Alexis. Duh. I should have known that. Hey, Alexis. So thanks for hopping on. Appreciate you. Okay, Debbie, go ahead and let us know.
Yeah, I mean, well, if most people don't know, the VA does not have a minimum credit score. So, but we often encounter folks that might have had some difficulties or issues. As a matter of fact, today I was helping a veteran. She's looking to buy a house, but her score was a high 500. So, certain banks might have overlays in terms of those lower scores. But the VA does not have a minimum credit score. So that was kind of what I was trying to explain to her. I think what we were navigating with her situation was really what makes your score low, right? Because most people don't just get a low score for paying their bills on time. And so that was what we had to overcome with her. She just had several issues, and unfortunately missed many different payments over the last 6 to 8 months. And so that really dropped her credit score. So, we kind of came up with a game plan for her, and that's okay. Sometimes people just aren't quite ready to purchase. And the most important thing is that we can guide them. So put them on a path and give them, some encouragement and some guidance in terms of how they can get qualified to buy. So that's what we kind of worked on today with her and her low FICO score. Again, being in the 500, she was a high 500s really. So it wasn't that, necessarily that she automatically couldn't get approved. It's just that I think this what we determined was all of those late payments for no particular one reason, right? I think sometimes we've gotten some folks that might have had like an extenuating circumstance. So in that case, underwriters would be able to overlook those late payments or missed payments. But in this case, it wasn't that, unfortunately. So just getting her some guidance as far as what we could do to get her on board to get in shape to buy, hopefully next year.
And Randy, real quick, does usually a lower FICO score always mean that they just had bad credit history, or could there be other factors that could be making someone's FICO score be low?
Well, I think the biggest thing for me is that to be encouraged that, number one, the VA loan is by far the most forgiving of any of the loan products that I have to deal with as far as residential mortgages. And it's the only one that I know of where in the guidelines themselves, the underwriter is tasked with finding a way to make it work. I mean, it's written right there in the guidelines that's what they're supposed to do. And a lot of times in some of the other loan products, you find underwriters that feel like it's the other way. They're like looking for some way to turn a file down, but you don't have that in the VA loan. You have exactly the opposite. And so for me, it's more of not being so much concerned about the score, because like Debbie said, there isn't a minimum score. Now you do have what they call overlays, and an overlay is just where that there's a guideline and then there's what lenders choose to do, because the VA doesn't make loans. They guarantee loans and lenders make them. And then that gives the lender the choice to say, hey, I only want to deal with FICO scores down to 620. I have 43 VA lenders, and half of them stop at 619. They don't go below 620. But I'd lose another half of that down at 579, and then I only have 5 that go down to 500. So that's what the overlay is that the lender has different choices. And the beauty of being a broker is that I have the flexibility to find the lender that's may have an appetite for you. But I would tell you that the biggest thing is they don't look at a FICO score. That's not the whole answer. They look at the overall picture, and I could go on, but that's the biggest thing for me is that don't be afraid. Don't be afraid to deal with someone. I would say you probably want to deal with someone that has some experience with navigating the muddier waters. That's the biggest key, is because I've seen, when I first started in VA loans, I was like, hesitant to give an approval to anybody that didn't have an automated underwriting approval. But now I have the option, the history to understand what it's going to take to move forward.
Yeah, I think that when it comes down to the process with the VA loan, it actually does give us that much more flexibility, much more of an opportunity to try to navigate through a scenario where, maybe a few years ago, a veteran may have had some obstacles, but because they didn't open up new credit lines or do things like that, it doesn't mean that that's the reason why we can't approve them just because they have a lower FICO score. Yes, like you said, there are overlays where certain lenders will cap you off at certain spots, but when it all comes down to it, you have the option of either navigating down that direction or helping them kind of increase their score to give them more opportunity, more options when the scenario plays out that way. I think that when it comes down to working with veterans and making sure that we're doing whatever's best for them, it is always going to be the thing that's going to guide us, right? They're going to tell us what their needs are. If it's urgent and they really need to find something now, then we might have to consider some of those really more difficult scenarios with a manual underwrite, where you do have a few more challenges, a few more things to have to consider, having an additional amount of residual to consider, having reserves, having which by reserves we just mean more money in the bank in case you have a tough month or something happens, something goes down and you have to repair it. Like, you're going to still be able to make your mortgage payment. So that residual
are called compensating factors, right? So
yes,
that's what the underwriter will ask for. What are the compensating factors that can kind of offset that lower score or perhaps those late payments?
Right. And a lot of times, I think the biggest challenge that we see is a lot of times some lenders will not, and I just mean like overall, right? Those who don't maybe not have enough experience with VA, they may immediately see, oh, I didn't get an approved eligible result when we run automated underwriting, right? Which automated underwriting, all it is that we essentially put it through a system that analyzes your information on your file, and it determines whether or not that file is with a result of approved eligible, which means it just automatically passes through. Now, when you don't, and you get just a refer eligible per se, then at that point it becomes a manual underwrite. And then at that point, we have to actually take all into consideration all those compensating factors, anything that can help in supporting your file becoming something that just really drives that file forward. If there are no compensating factors in there, it's going to raise challenges. So we always say, or at least for myself, I always say that as a team, we'll try to give you as much instruction as we can to guide you, but it doesn't necessarily mean that it's a no. It just means it may just not be a right now. Right. So tell me, Randy, how have you kind of gone through some of those challenges in the past?
Well, I would tell you maybe again that there's no need to be afraid, and I've been blessed to have some opportunity to overcome situations that multiple other lenders have passed up. And so one of a prime example was just not too long ago. I had a client came to me and they had been turned down by 4 other lenders. And they were attempting to buy a pretty substantial home amount, and they didn't have any income issues, etc. But they had some credit that was 8 or 10 months ago that they had some pretty big issues, kind of across the board on their revolving stuff. They kept paying their mortgage, they kept paying their cars, but they let some other things slide, and so basically, the biggest thing is to get the story and understand the story. And in this particular instance, the veteran's dad had fallen ill, and it turned out deathly ill. And the veteran was in Texas, and the dad was in Chicago, and so it took him away from, and he was an only child, basically, for the most part, as far as my memory goes. He was an only child, and he had a dad that didn't have no spouse or nothing, but had some big health issues. So he literally spent a lot of his time up in Chicago, taking care of his dad in his dad's final months, and then taking care of his dad's estate, etc. So the pay history directly, you could tie it to those months. You could see exactly what happened, and he took care of the big things during that time period, but the little stuff, he just kind of let it slide, and it was just a focus thing. And then, good news, bad news type situation. Time had gone on. They were able to tie up all the dad's affairs after he passed, and you could see that it was a fine line, that from that point forward he paid everything well, and then and then on top of that, his dad's estate had left him a substantial amount of assets, and so basically from an underwriter standpoint, they were able to look at that situation, and they were able to see that the cause was finite, that it wasn't going to be ongoing. Obviously, the dad only dies once, and that the reserve situation, the compensating factor, like Debbie had said, was that now the guy had an extra $100,000 in the bank, or 120 or whatever it was in the bank, that he had never had before, and his debt ratios were in the 30s. And so
it makes sense
when you put everything together, the chances of this guy defaulting in the future are much less than they have ever been. And so when you put that all together for the underwriter and put that in a package where that it ties the lates to the dates, to the explanation, etc., it was a win-win. And I don't know why the other 4 mortgage originators didn't do that. It was a more
tied together. Yeah, in essence, that's what we need to do, and it's our responsibility to make sure that we're tying the situation together, tie it together with something in writing, not just a letter of explanation, but some documentation to show the underwriter, like, hey, this actually did happen. This is
right.
what affected their situation, and make it possible.
That's what we did.
Exactly. Yeah.
documented everything. We had a death certificate, and normally that's not something you would put in a package, but we put it all in a bow and tied it up nicely, and um, and it wouldn't fly at 4 other places, but we were able to. So I'd just say don't be afraid, but make sure it's like anything else, who you work with matters. And I've learned a lot from my fellow veterans like you guys at at Vetted VA, where the people have said, "Hey, you can do this. There's a way to get it done," and that's the community that we're a part of. That I think is such an important part of that whole community is to say, "Hey, I got somebody through this situation," and sometimes in the past I've said, "Oh wow, I wouldn't have thought that I could get that through."
Yeah, it's critical, Randy. It's critical to find and to get the story. I think so many loan officers don't take the time to really understand and to get that whole story. I think they just, and that's probably what happened with those 4 other banks. They were in it to just see if they can make I guess a loan real fast and move on, and they didn't take the time to really get to know that veteran, see how they can help him, and telling that whole story to the underwriter. I can't tell you, sometimes what I'll do when I have these complicated loans, and I had one recently, is I'll type up like a little bio, sometimes, and just kind of give the underwriter really a written story about what's been going on with this
I call those love letters.
Yeah, yeah, and really, and then
just a map.
And then just share that. But I do like your point too, as far as the community we have within Vetted VA, because sometimes you're pulling your hair out trying to figure out how to make this happen, and you'd be like, has anyone ever seen this? And believe it or not, others will chime in and add to, and that's great. We do have a question here, guys.
Yeah, we do. Yeah, so that's what I was going to bring up. I was like, what's the lowest and highest score that you've closed on a VA loan? So I'll let you continue, Debbie.
I've had I think my lowest had to have been a high 5. I want to say 580. That's probably the lowest I've had, and the highest I closed one over the summer. The guy had like an 820.
You, Randy, what was your low and high?
The low was 0, and
wow.
and then the high was 816.
Yeah, I've had one where there was no score whatsoever, just because they hadn't had credit in the last like 15 years or whatnot. They didn't believe in credit, and so. Yeah, I've had one of those before. I think the lowest one where I've had where there was challenges, and that's why they were there. It had been like 3 years since their last late, but they had a FICO score of like 463, I think it was. It was pretty rough to try to find a lender to go with it, but it does bring those challenges, right? Where we talked about, it's like they had clean history. They had like since then, right? Clean history since then. They also had reserves. All those factors really played into it, and so those are some of those things that you find. And then, yeah, I think like you, Debbie, I think mine was like 817, 819, something like that was the highest FICO I've closed on a veteran.
Sometimes the 0 scores are a little easier than the 430s.
They can be, yes,
yeah,
by far. And I mean, Alexis just is spitting out questions that were really solid right now, which I really loved. So another one was, how can we find out who can help close the loan if you have challenging credit? So just in a nutshell, guys, the community is here to answer all those questions. Whenever you guys come to the community and you do have a challenging situation, we have a ton of veterans in the group that are posting up even anonymously, just so that way it doesn't expose you in any way, but it lets you put out that scenario for us to kind of discuss with you and really dive into some of the questions and try to identify exactly how we can help and direct you. I will say every loan officer within Vetted VA is probably going to have, a less challenging time than I would say than anybody else, just because we all share amongst each other. So the challenges that we face, we share with each other, so that way we can communicate that to our consumers when we're dealing with other veterans. We want to make sure that we have like, hey, look, dude, I hadn't experienced this, but this person did. So I know if they did it, we can do it. And this is what we need to do, right? Based off of their experience, this is what they had to do. And that's how we can get across that bridge. And I feel like that is sometimes the beauty of this community, right? Vetted VA is honestly, since its inception, has been one of those places where you could go ask the questions. Randy, you know this. For you and I were here from the get. Um, the community started off with just everybody and anybody who had knowledge of the VA loan that was willing to share and not solicit be here, right? And we shared so much, and it made this community just explode so fast. So I really truly feel like that is a reason why we're able to have these conversations and know, like, hey, yeah, we've been through that scenario before. This is how we got through it. And guess what? Let me go ahead and reach out to that person that I remember saying this before and say, hey, how did you get through that challenging situation? Right? That's super helpful for us, for all of us. Um, but I think that like we were talking about before, overlays make a big difference, right? So I would say, just like you, Randy, I have about 5 lenders ish that will deal with the below 580 FICO. Um, it makes it difficult sometimes. I will say it, and a lot of times the best course of action is taking it for a TBD scenario, which is a to be determined file that gets submitted, no address, just all your documentation, analyzes your info. What are some tricks that you've used, Debbie?
TBD is definitely one of the solutions. Submitting it to some of my my lenders that I know are going to be a little more open to these scenarios. A direct line of communication with these lenders really helps too. Just having that one-on-one relationship with some AEs, and then of course, we've got our peers that we know in the community that tend to take on some of these more challenging loans often. And we can reach out to them and ask them, hey, have you ever seen this situation? I'm running into an issue with this, and I'm not sure if there's a particular lender that would be able to overcome that. So those are kind of what I do when I run into those challenges. So yeah, leaning into the community, and then with my account reps as well.
Yeah, and Randy, share with us a little bit about what you include on your like your letters to the underwriter, so they better understand the situation, and what do you normally try to request from the veteran in order to kind of help solidify that presentation over to the underwriter.
So my training, I've been doing this probably longer than a lot of people are alive, but my training, that my very original trainer was, we didn't rely on FICO scores. We didn't go on anything other than what we looked at the profile, and I always remember the 3 C's of lending, and the 3 C's, the way he put it was credit and capacity and collateral. So basically, when you put the things together, it's just getting like a 30,000 foot view of, this is what we have in the way of income. This is how solid is the income situation, how and sometimes again, you can have issues where that people are in the job changing on a regular basis, etc. But that's part of the character that they present, and it's going to be addressed in the guidelines that the underwriter should make special understanding of the fact that they are in an industry that they change jobs often. But again, you go to the credit, you go to the capacity, meaning how much do they make? What talk to me about
The likelihood of success.
averages, etc. And then your last is the collateral, and sometimes, going back to the compensating factors that Debbie had mentioned, sometimes it may mean that even though the VA is a zero down loan product, sometimes you can get past that if the borrower has reserves and is willing to put a down payment. That's a compensating factor that can overcome some really big things, like the guidelines actually talk about, and this has not to do with bad credit, but in the instance that people have less than 12 months left on their orders, it talks about that if they put 10% down, that's a way to overcome that. And so there's not necessarily bad credit is not necessarily the issue. It's like situationally, and you just want to paint a overall photo from the 30,000 foot view down to the micro view of this is what we have, and if there's any issues, let's address them. Let's address the cause, the timeline, etc.
Sure.
And you lay that all out in every file to the letter. This is an old habit that I have of just putting it all on paper in an email or a letter
Detail it out
to the underwriter, and I call it the map. This is what you need to be looking at, and my big thing is to guide them to through the process on what they need to be looking at, and already have an answer for any question that they might have, because I think that's one of the big keys to being successful as an originator is to answer questions before the underwriter has them, because it's easier at that point in time. They come up with something and they say, oh, he's already addressed it right here in his map, and that's the big piece, is just to make sure that you find any holes in the picture, and that you address those, and more than just address them in a letter. Like we talked about before with the death certificate, maybe that's not something that you would normally do, but in that instance, it was everything.
Yeah, it's a supporting document that would basically paint the picture. One of the basic trainings that I got as soon as I got into the mortgage industry was learn to be like Bob Ross. Paint the picture, say the brushstrokes, the right? Like, this is literally what we're doing as we're writing these letters out. Sometimes it's identifying, like you were saying, the holes in the scenario, and how to cover them up, or how to not necessarily cover them up, but how to fill in with proof, so that way the underwriter looks at the scenario and says, hey, you know what, okay, that makes sense. I can see how we can work through that scenario. Get me X, Y, and Z, right? I've literally had conversations with underwriters, and even recently with somebody that's close to me. They into a home. They just had the hardest time. Thankfully, the seller didn't occupy the property anymore, so it really, like, everything kind of came together perfectly. But their biggest challenge was having their property listed for sale and trying to buy another property, even though they had enough entitlement. The lender, because of their scores, they were just not comfortable moving forward until that home was sold. So we did try a couple different other lenders to try to make it work, and thankfully we were able to at least prolong it a little bit to kind of build that opening for us to then take it back to another lender. And then they finally said, oh, okay, yeah, we'll actually do it like this. That's fine. Just send us proof that it closes within a certain amount of days, post us closing this loan, and voila, it was done. So it is a challenge sometimes. And I will say, I'm known for taking on some of these very difficult scenarios, and still trying to make it come up successful. I mean, is it always easy? No, absolutely not. Sometimes there are some of the more difficult loans that you can get, but also sometimes if you paint the picture right, it actually can breeze right through. I've had manuals do that. Have you, Debbie?
Yeah, and I was just going to say, and sometimes it's not necessarily the right time to buy a house, right? So some people might come to us looking to buy a house, and you could say, all right, well, let's look at your credit, and you pull their credit, and they've got a 480, and maybe missed their last four car payment, something like that. You have to kind of feel good about the loan yourself.
Yeah.
Like, what's going on personally? Do you guys hear that echo in the call?
A little bit, yeah.
I'm not sure what's going on there.
Mm-hmm.
So it's one of those things where I personally have to feel like, okay, this is going to be good for my client. Buying a home is going to put them in a better position. If I see patterns that really don't make sense, that's kind of where I'm going to dig in a little further and be like, all right, maybe it's not quite the right time for you to buy. Not that I'm here to be the decision maker by any means, but I'll have those discussions with them as far as, if you missed your last 4 car payments, what's going on? Let's try and understand that a little bit better so that we don't get you into a bigger mess by, you know, uh, you know, skewing the truth or something with an underwriter and then getting you into a home. So those things are really important too. Just really understanding their situation. Again, it's not necessarily a bad thing. It's just one of those things where we want to make sure we're guiding them the best we can.
Yeah, I think that sometimes that's where it comes down to it's not a no, it's a not right now, because sometimes you have, and I'll use this as an example. One of my loan officers ended up having a specific situation come up with a client that they had gotten referred. The client said, "Oh, well, you know what? Isn't there a way to make it happen?" And we told them, unfortunately, based off of the picture that we have right now of your financial situation, there aren't enough compensating factors. Which there was only one, but there wasn't enough there for us to be able to put that in front of an underwriter and have them look at it in any other way other than a quick turn down. So we let them know, hey, we're going to probably have to wait 6 months because that will be putting you outside of that 12-month window, and we can then move forward. Well, the reason we do this is not because we don't want to do the loan. It's because at the end, we don't want them to go under contract on something, pay for inspections, pay for the appraisal, pay for X, Y, and Z, and then ultimately end up with themselves just standing there holding the bag, right? Because that's not fair to the veteran consumer just because somebody said, "Oh, I think I could push it through," right? Not really trying to identify how they're going to do that, just saying, "Oh, I think I can get it done." It's not an I think. You either need to know that you can or cannot do this, and you have to have the sufficient pieces of the puzzle to put it together. If you don't, that's never going to work. So have you, Randy, in your situation, have you been able, or have you come across a scenario where you've had to tell a veteran, you know what, sorry, because of all the factors that are in play here, we can't do it right now. You
I
have
mean, I think that's the biggest thing. Like Debbie said, it's not necessarily a no; it's a not right now. And sometimes it's as simple as looking at everything and saying, "Hey, I don't really understand why you don't have any reserves, etc." Because of, like, on paper, it shows me that you've got like $6,000 a month extra, but I don't see that coming through anywhere. And it could just be that you need to go into a what I call cornbread and beans situation, where that you cut out the all the luxuries, etc., because you're going to be focused on getting yourself in a situation where that the underwriter is real comfortable with you doing it. And one of the ways to do that is to cut out a lot of expenses, go through the Rocket Money or whatever, and all the subscriptions, and get rid of all the extra things, etc., and stop eating out all the time. Cook some cornbread and beans. That's what I say. And so
more DoorDash.
6 months from, exactly, that 6 months from now, if you take that extra $6,000 a month that you have and pay off some debt with it, and then put it in the bank, and then we're going to talk to an underwriter, your situation looks totally different to them. And so I certainly have to do that. And it's not something that's pleasant for anybody involved, but it's the big thing with, I feel like most of the people in vetted VA have really good hearts. And so it's a hard thing to tell them not right now,
Yeah.
but it's the right thing to do sometimes.
Right.
That you need to understand that you're not ready right this minute, and these are the things that you can do. Let's put a plan together, and if you follow that plan, I will work with you. I mean, the longest I've worked with someone that successfully was like a little bit over 4 years.
Yeah.
Wow.
Yeah,
get
you and I both, buddy. Yeah.
To get them in a situation that they could buy. And in their case, it was because initially it was a credit issue, but then they ended up having, when I first visited with them, they were W-2 type employees, and they ended up working on their credit for a couple of years, but then they had extra assets, and they had opportunity to go into business for themselves. And so then we had to do a couple of years of taxes and a history of doing well in that business. And, 4.5 years later, we put them in a home that they were really, really proud of. And we just kept tracking with them throughout the whole thing. And yeah, before they started the business, I told them, I said, that's fine, but it's going to be 2 more years that you're going to add to this whole thing. They said, well, we don't really want to, we want to focus on the business right now. And I said, then giddy up, let's move forward.
Yeah. One thing we didn't mention too is the impact that a good credit score can have on your interest rate, right? Because depending on how high your credit score is, it can impact your interest rate. And so that's something else to consider, because that can affect your monthly payment and put you in a position. Now, you're not going to see obviously huge variances like a point or anything, but it does make a little bit of a difference there as well, in terms of what you can get.
And I think that's one of the big things for me that we really need to caution people about going in willy-nilly and paying off all their debt, just going for the highest FICO score. Yeah. Because I think sometimes that the people don't really have the real understanding that a conversation with a really good mortgage loan originator would bring clarity to what do I need to pay off and what do I not. Because you can just throw a ton of money at stuff to try to get your credit where it needs to be, et cetera, and it might not be productive at all. But but for me, I educate people that for the most part 680 is golden. If you got a 680 FICO score, the 816 is not going to get that much better pricing. But if you got a 619 versus a 620, even that could make a huge difference for you.
Absolutely.
And it goes in 20-point bands from 680 down, and the farther from 680 you are, particularly impacted by 620. And then again, remember earlier we said how many lenders go down to 500. Obviously, the 500 FICO score is not going to be pricing anywhere close to the 680. So don't go out and willy-nilly throw stuff away. I would say get a relationship started as soon as possible with a knowledgeable loan originator that's going to be able to walk you through the process, and then follow the plan. Get the plan, follow the plan.
I think sometimes that's the biggest puzzle piece, right? Because we can set up a game plan, and like you were saying, there's clients that I've had as well that I've been working with them for well over 4 years now, and a lot of times there may be challenges that pop up, and then you work through them, but then another set of challenges pop up. Just like in your scenario, they go and work as self-employed, and in my just given an example, right? My client scenario, they've unfortunately gone through a few different challenges, and one of them paternity. Them dealing with paternity issues, they don't know if they're going to have the money now in order to be able to focus solely on their home and investment. So the best thing to do was to throttle back and just continue to maintain their credit in a good state. And I mean, so far it's paid off for them. They're now sitting, in the 620s. When we first started talking, I kid you not, they were at 379. So it is a huge jump that they've come in 2 years, in the last 2 years. And now it's just, okay, now we're waiting on the scenario to play out for them in order for them to get out of kind of that weedy area of the whole paternity situation that they're dealing with. And so once all that clears, now they're going to have the doors wide open to be able to move forward. And sometimes that's just equally gratifying for us as loan officers to know that we had a part in helping them get through some of those challenges. Mm-hmm. Because you see it all the time. You have disabled veterans that are dealing with only having their 100% P&T income. They don't receive any other sort of income. You have the spouses sometimes even working as their caregivers and things of that sort. So you have a plethora of scenarios that we will run through, and a lot of times those are the ones that typically are a little bit more. You got to roll up your sleeves and really go to work in order to best guide them and help them. So. I think at the end of the day, we all care enough to want to see those challenges through, and help them kind of reach that goal of home ownership. So just in general terms, like what's probably been your guys' most challenging scenario that you've dealt with, Debbie?
Well, goodness, I'm trying to think. I think sometimes, I've had some issues where we're trying to get to a certain a credit score for some reason, and just to kind of elaborate on that, we do have tools at our disposal. One of them is it's called a credit rescore, where we can work with our clients and help them kind of get, like Randy was saying, you don't want to necessarily pay all your debt off, or maybe you have maybe saved up or get a good tax return and you get 10 grand back or something. You don't want to throw it all at one debt. There are strategies, and so definitely want to make sure that you're working with a good loan officer that can help put a plan together in that terms. And I'll also say this, credit is something that you should protect and respect. And so don't be so free to co-sign for your brother-in-law on their car, or maybe let your sister's boyfriend take your credit card out. Things like, you want to really protect your credit. And so I see a lot of times where folks are co-sign. I mean, I'm just so amazed at what people co-sign for. And it's just like, you want to really protect that, because it's a big deal. And once you dig yourself a hole, it can take a little while to get yourself out of it. And really, it's affecting you and your purchase power, and how soon you can get yourself into a home and start building wealth for yourself, as opposed to co-signing for other folks that are not going to be very respectful of that. So
Yeah, definitely agree there. What would you say has been some of your biggest challenges there, Randy, when dealing with sometimes those lower FICO or those manual underwrites that probably leave you kind of gasping for air when you're done?
Well, one of my biggest challenges that I always point out, to myself at least, is that we had a deal that was definitely a manual underwrite, and it put everything together, wrote the whole the whole map, and put everything, laid it all out, and it was all about the fact that this young lady had gone through issues, and that she was on the other side, and everything looked like that too. But she had significant reserves, and I say significant. They were like $12,000 in reserves. We weren't going to use it. They're just reserves, and it was just a compensating factor to help us. And we talked about compensating factors earlier, but in this particular instance, we got down, and because of the time frame, it ended up we had to have another bank statement to keep everything refreshed. And the new bank statement came in, and instead of having $12,000, it had $200. And we're working very hard. This lady had 7 kids, and we really, really wanted to help them with the house, etc. And I was expecting that maybe one of the kids had gotten sick or whatever, but it turned out that her dog had gotten sick, and she spent $12,000 on her dog, and still had to put it down.
Oh,
and so it was like
That's rough.
We had to wait.
Yeah.
So because of this, we had to wait and rebuild, and so that's just very tough to deal with, because my heart went out to her, but basically she had 7 kids that didn't have a home because of a dog that didn't make it anyway, and
oh my gosh!
and so it's a very difficult thing to say.
I just dropped $1,000 so my dog could get an X-ray on his shoulder. It's not cheap.
It's not. I'm in the same boat with y'all. Mine got cancer, and I ended up having to get a bunch of stuff cut out. Thankfully, she's good now, right? She's an old lady. She's literally right there.
Yeah.
No, actually, right there somewhere.
Yeah.
But ultimately, like we love our pets, but we have to also remember and take in consideration everything that we do with our finances, especially when you're dealing with a home purchase. Everything has to stay stable. If it's not stable, it's going to affect your ability to qualify.
And
so
I have another story too that's very similar in some ways, but it's cautionary tale. And I had them ready to buy, etc. And we were in to the final stretch, but they had a lease that was going to be a couple of months left. So I had them all pre-qualified like 3 months before the lease was up, and so we're ready to start shopping. I picked up the phone to call them, and the credit bureau that I'd used uh, um, to qualify them earlier, it was a soft pull and it had expired. I had to do the hard pull. And they said, yeah, we're ready to do the hard pull. And I pulled it, and there were $4,800 in new car payments
Oh no.
on there, and they were brand new, and there were 4 car payments of right around 1,000 a piece, and one of them was for them. They could budget for one, but they went and bought a new car, and this was around the holidays, and then they co-signed for 3 children each for 1,000 to 1,200 a piece for a car, and that was just heartbreaking because you know you can overcome that if you're a year down the road,
Sure.
right? And you can show that the actual person you co-sign for is the one making the payments, not you, etc. But when they just did it, they just opened over $4,000. It was like $4,600 worth of payments. That was heartbreaking because you're not buying a house right now. I'm sorry.
Yeah.
Not in that scenario.
Cancel that.
We can't do it.
Yeah. No, I've had a similar scenario to you there, Randy. And I think the only thing that I was able to do in that situation was present the purchase contract that showed both their names on it. And then that the money that came for that down payment on that vehicle was from the actual, the daughter, I think it was in their situation. It was the daughter, and she had given the money out of her own account and then had just made that first payment. So we were able to actually get that approved and submitted through. But yes, when you have 3, that really puts all the pressure on the underwriter to be like, well, do it.
And it was an education thing because all 3 of them, that the parents were the ones that the money came out of their bank accounts for the down payments, and the payments were coming. The first payment had already come out of their account. They said that they were giving them cash, and so I had to educate them on the right way to overcome this for a year down the road. But I would just say, be real careful of the co-signing.
Yes.
And also sometimes it can work out that a lot of times people are authorized users get involved, and sometimes that can be something that like I just had a deal that it was okay. And the reason it was okay is because I looked at their credit, and the guy had a low FICO score, but it was all on 2 accounts that he was an authorized user on. And so I pre-qualified him and got the story on that. And it turned out that those 2 stories were that he had way back when he was first starting, and it's like 12 or 15 years ago, his parents had added him to some cards to get him started in credit. Now he's got totally established credit now, etc., but he still has these 2 authorized user cards on there, and his parents have fallen on hard times, and they've trashed those 2 cards. So it's just a matter of a phone call to say, hey,
remove me off of,
get him off of this stuff, and his score jumped up 80 points.
Wow.
Yeah, I've seen the same.
Be very be cognizant of authorized users one way or the other.
Because it could be a help, but it also could be a big detriment for sure.
Yeah, exactly. And then and just tell these people, obviously I would tell everybody to just focus on the house. If that's what you want, then it's cornbread and beans. Focus on the house. Don't help other people before you help yourself. It's kind of like that they tell you when you get on the airplane, parents, put your own
take care of you first.
Take care of so that you can still take care of the kids, but focus on the house. My big takeaway.
All right, what's a big takeaway for you there, Debbie?
Yeah, credit is really how the banks see how you can manage your payments, right? That's their key indicator. And so it's a critical measure when underwriters are looking at your loan to see, are you going to be worthy? Are you going to be reliable? Are you going to be able to pay back this debt? And so guard that credit, you know, be respectful of it, and, you know, just really try and keep that score as high as you can. I would always say, you know, even if you can't pay off your entire balance on your credit card, try and make those minimum payments at least, because one late payment can really tank that score. So the last thing you want to do is make any late payments. You know, I've even had a situation personally where I came back from a vacation and opened up the mail and said, "Oh my gosh, my credit card was due 3 days ago." You bet your butt I was on the phone with them telling them it's coming right now. You know, take my account number on the phone, and you know they're willing to work with you most of the time. But you got to avoid those late payments to avoid those credit scores from dropping.
Yeah, it when it comes from, you know, just from the experience that we've all dealt with, right? We all know that we've probably heard every story, every possible situation unfold in front of us. A lot of times, the biggest challenge that I say you can mitigate yourself as a consumer is go talk to a loan officer first before you start paying on anything that's old, anything that is considered a collection or a charge off already. Before you go and try to mitigate any of that expense, talk to a loan officer first. Have them analyze your credit, even if it's a softball, right? Have them analyze your credit, determine exactly what needs to be taken care of first in order to be cleaned up. Sometimes you can do pay for deletion. Sometimes you can do a request for a settlement for less than what's due. Sometimes you can actually just get away with, because it's a charge off and it gets challenged, it can actually get removed off your credit report altogether. So there's a multitude of ways to kind of clean up the past history. Just make sure that your current history stays as cleanly as you can keep it. And also, if you know you are in a scenario like Randy had brought up early in the conversation, is don't be fearful of having to do a down payment. I've seen transactions that have been gone from a refer eligible, which is a manual underwrite, to approved eligible, all because they put 1% down. So even if it's a larger purchase price, let's say $600,000 purchase price, that's $6,000 that you would put in as a down payment. Tell me that you wouldn't rather pay $6,000 as a down payment to make sure that you get an easy path to home ownership versus facing tons of challenges and still possibly having to pay, you know, more out of pocket because you're going to have to take possibly a higher interest rate because it's a manual underwrite. So those are all scenarios to consider, and you know, I think as professionals here in the group, we all take pride in what we do, and we want to make sure that we serve you guys to the best of our ability. It is never one of those situations where we're doing this for us. It's not about us. It's about you guys, and hopefully, every veteran that we serve will continue to be, you know, guided in the best way possible. And you know, as an organization, I feel like we do a good job of answering all those questions. And like I said, don't be fearful to go anonymous into the group and make comments about these scenarios. The more you offer up to us to face those challenges, the better we can get as well on being able to help navigate other people through those same type of challenges. And I'll leave it to you, Randy, to give us our final word here. What's something that you would say is a final takeaway?
Well, one thing I want to point out, you just said something that I think needs to be developed a little bit more, and it goes along with what we talked about, not shotgunning out there. But when you're dealing with old collections and that sort of stuff, some people want to just go ahead and throw money at them, and what they don't understand is that can bring them the secret to looking at a credit bureau is the older it is, the less it affects you. And there's certain points that things are going to fall off, etc. But they go off of, a lot of things go off of last activity. And so if you haven't touched that thing for 5 years, but all of a sudden you pay something on it, it brings that negative event to a now. And people don't understand that necessarily, but we need to make sure that they understand. That's why you have to be talking to my final takeaway is that's why you need to be talking to a professional and have that relationship early, because you need to know what is the right thing to do versus the wrong thing to do. And you need to have a plan that you work. So my takeaway is get with the professional, start a relationship, someone that you trust, someone that talks your language, and put a plan together, and then follow the plan. It could be a now, but like Debbie said, sometimes it's not. It's not a no. It's a later. So
Yeah.
that's my takeaway.
Thank you. Yeah, appreciate that, Randy. So, like I said, group members, thank you so much. If you guys are here watching us, we appreciate you guys. We love that this community is here for you guys. Like to us, it's an honor to serve you all. And so we ask that you please continue to come back, come on to these lives, ask questions, post it up there, because at the end of the day, we get better by serving y'all. So the more you guys give us opportunities to navigate your circumstances, the better we can be for other veterans as they come down the road too. So thank you guys again. Appreciate you both for coming on and doing this live. Again, I know we kind of pulled this thing together rather quickly here at a final moment here, but it was a pleasure being on here with both of you, and look forward to seeing you guys again in the future on some of these lives.
Yeah.
Thank you. We'll see you guys. Take care.